whole market knows something's overvalued when both the shorts and the longs agree that a stock is too high, when the lockup on insider sales is cracked before it was supposed to, here's the only one thing that I need you to do. Run. Don't walk away from that stock. Run. And when I say that stock, I mean Beyond Meat. Ever since the Ersatz Burger Company announced its secondary offering, the stock was trading at $222 at the end of July. It's been a nightmare. In less than 3 months, it's lost more than half of its value, down to $106 today. What went wrong? Was it the taste? No, I mean, it does need a little spice up now and then. This is Old Bay, and Baltimore's looking pretty good, by the way. Look, Beyond Meat, frankly, when we got it. Beyond Meat never should have been that high in the first place. The stock peaked when the company reported a strong quarter, but also it announced a 3.25 million share secondary, including about 39,000 shares owned by the CEO, Ethan Brown, who's really a terrific guy, by the way. But you know what? Hey, this isn't about friends. It's about money. Yeah, and the lockup of the insider sales wasn't supposed to expire until the end of the month, so that was premature. Hey, I'm not taking any chances. Because Brown wanted everyone to win on this impromptu insider sale, he priced the secondary at $160. That was more than $60 below where the stock had been trading. Discount. And they did win. Briefly, Beyond Meat popped back up to $169 soon after. You could have had a nice win if you were nimble enough to get in and get out. But since then, it steadily worked its way lower. Now, you could argue that the stock collapsed once we started hearing about the multiple competitors working on their own plant-based meat alternatives, including Impossible Burger. Wow, hey, I love it. I had one. Nestle, Hormel. Oh, I like the chicken fingers there. No, actually, I like the Tyson chicken fingers. I had Hormel on, and I like the concept. Okay, all four of which have deeper pockets than Beyond Meat. However, that explanation makes the situation more complicated than it needs to be. You see, I think the additional shares, the ones that came deep in the hole at 160, that broke what's known as the tightness of what had been a vicious short squeeze. And it was the short squeeze that drove Beyond Meat's spectacular rise from 45 to 239 in just a couple of months. Why do I say that? Because we've seen this story before. Beyond Meat's not the first fresh-faced company to come public with a rapid growth rate, a ton of hype, and far too few shares. If anything, it reminds me of GoPro. When GoPro came public in 2014, we heard this was more than just a body camera company. It was a whole ecosystem. The IPO priced at $24 and one of the hottest deals in the era. And then the stock quickly soared to around $90 about 4 months later, thanks to a major short squeeze. Just like Beyond Meat, you couldn't locate any shares of GoPro to sell short before you did so. And that's what causes the dramatic ramp up along with the overly excited retail buyers. You can't find stock. I found it. But then, also, just like Beyond Meat, the underwriters allowed the lockup on insider sales to expire earlier so that two of the founders could sell 5.8 million shares to a new foundation. The stock never recovered, swiftly falling to $38 a few months later. Sure, GoPro bounced back to around 66, a little bit, right? But then in the summer of 2015, 6 months later, it was trading in the single digits. Oh, it's still a denizen of this. This is a Xenia. All right, anyway, I remember being in Hawaii when GoPro hit $90 on the way up. I had popped into a surfing store where I saw a video running of a goat wearing a GoPro on a surfboard. A goat! When I asked the clerk about it, she said, hey, listen, why not? They had just done a showing of a pig surfing with a GoPro on its head. To me, I mean, honest to God, really, a goat surfing on a pro, with a GoPro, that was the closest thing to a bell going off that I ever can recall about a stock. I felt like we'd reach saturation point. I mean, there are only so many ways and places you can wear a GoPro that I know of. And I recommended selling a stock as soon as I returned from Hawaii. Of course, if the founders hadn't decided to sell a bunch of stock right then, I think it could have gone even higher. But the lockup expiration was inevitable, and as soon as it happened, GoPro was doomed. The whole move had been propped up by a short squeeze. So once there was more shares on the market from the lockup expiration, people could actually short the stock. They could find the stock, and they could short it, and it came right back down. I think we're seeing the exact same thing with Beyond Meat. It's really happening, people. It is happening. The moral of the story, just building a little fortress here. The moral of the story, what matters in these situations isn't the fundamentals. If the numbers mattered, these stocks never would have gone that high in the first place. No, it wasn't until the new supply hit the market. Then that's when they peaked. That's what made the difference. And listen, I think Beyond Meat can go lower from here. Do you know that next week 48 million shares get unlocked? Do you know that's 80% of the share count? Will this money-losing company still be worth $6.7 billion after that lockup expiration? If the $3 stock that is GoPro, $3 is any guide, people will find stock. They will find stock to sell. They will short the stock. They will knock it lower. And so the answer is no. Hey, why don't we talk to Gary in Florida? Gary.
Booyah, Mr. Cramer.
Booyah,
and thank
Gary.
you for educating us all.
Oh, I do my
Gary
best. I
from
try to
Lighthouse
make it
Sports.
interesting. Go ahead.
All right. Reason for calling, I am calling because I'm in the house of pain. 40% down.
The house of
Jumia
pain.
Technologies, JMIA.
Why? Gary, why? Why did you want to own that stock? Let's get out of that stock before it's too late. We got a stock market that's going down, hand over fist, because of something happened to Texas Instruments. Let's buy a little Bristol Myers. Go for stability over craziness. Let's go to Ronald in New York. Ronald.
Hello.
Ronald, how are you?
I'm just fine. Is this Jim?
Yeah.
Well, thank you for taking the call, Jim. You provided great service to the retail investors. So let me tell you,
Okay.
about 3 months ago, I took a very small position in CrowdStrike. Since then, it's
Why?
been hammered.
Why?
So I don't know whether to sell it, to buy more, or to just sit
No,
tight.
Heather Bellini, one of my absolute favorite analysts at Goldman Sachs, she put a sell on CrowdStrike. Now, it's come down a lot, and I get that, but the whole sector, whether it be Palo Alto, Proof, CyberArk, oh, my God, even Heather Gaines' favorite Zscaler has been hurt. And Cramer family fave Okta has been hammered. We've got to wait until these stocks find more of a bottom. You'll see it when they bounce. And then I'm going to okay CrowdStrike. But right now, free for all, CrowdStrike, Google it, you see it. Run as fast as you can, people, when the bulls and bears say something's overvalued, like when it comes to Beyond Meat. Yeah, man, this stuff is just, well, I mean, you got to run fast. Okay, there's much more mad money ahead. How's the trade war impacting your video game habit? I'm going to sit down with the CEO of Logitech to find out more. Then there are more women CEOs of Fortune 500 companies than ever before. The grand total sits at a whopping 33. I'm talking to the founders of one investment firm that wants to make money and change that. And all your calls rapid fire in tonight's edition of the Lightning Round. So stick with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.